and welcome to Moneycontrol. Hi, this is Nikki. Shree Summit has kickstarted Q2 results season on a weak note. We are looking at multi-quarter low unitary EBITDA performance. Along with that, a missed estimate when it comes to the realization performance. But is the second half better than what the first half has been for the company? To know more about the company financial strategy and the year ahead for the industry, we've been joined by HM Bangur, who is now the chairman of the company. Mr. Bangur, festive greetings to you. And congratulations, now you're elevated to being a chairman from the managing director. And of course, you also have a new managing director on board, which happens to be the ex-CEO and MD of ACC and Ambuja. So how does the strategy now stock up for the entire company?
Entire company is growing at a very fast rate. Our aim is that from 45 to 46 million ton now, we want to grow up to 80 million ton in 5 years. For that, very experienced who has worked in multi-location and various type of big companies, that was the person who was needed to head the company. We have grown the company up to this stage, and now because of the further complexity, when you have so many operations, so some real expert was needed. We chose him.
So, what kind of expertise has the new managing director brought in? Are you looking more from the inorganic perspective, or are you looking more from the perspective of now having cost savings in your kitty? Because Shree Cement typically has been a company which has looked inwards and expanded capacities. So, how does that change right now?
Right now, we will be reviewing our strength, whether we will be needing outside, which we think we will be needing. But again, it maybe in another 15 days' time, looking at the company's present position. Now, you see, this game of running companies is not a game with fixed timeline. It is a continuous game. For 1 or 2 quarters delay in acquiring outside companies will not matter. It is a timeless game which has to be played to 50 years, 100 years. It is a long game. So we will look at the best option, but our aim is very clear that in 5 years time we will be 80 million ton.
So clearly, if you are looking at an 80 MTPA capacity, the game is long drawn, like you said. How much of that
Right.
do you think you would be focusing in from the inorganic ways?
Inorganic way will be our main focus, and we have the means. We are now making the 4 million ton unit in Navalgarh, which will be adding, that is 4 million ton clinker will add to 6 million or 7 million ton cement capacity in Andhra. We are already started work. So we think our inorganic plans will in next 6 7 years, by 2028 or so, we should be about 80 billion ton. There is no doubt about it. And if there is a right prices and the right location, because many times the price is right, everything is right, but you are already there, so it doesn't make sense. So we are looking at new horizons, new places where at present our capacity is not there.
Sure. What percent out of the next 40 MTPA capacity you think would be inorganic in that case?
About 25%, 75% will be organic only. And which 25%, because it is a long game of 5 to 7 years, new opportunities will keep coming. Old opportunities will go away. Somebody else will take it, or it is not worth it. So right now it will not be proper to answer in which area or which site, but roughly 10 million ton we will be taking from outside, 30 million ton will be adding ourselves.
That's fair enough. I think also you've been pretty vocal that you would like to acquire assets at the right price, right? More than
Right.
just going about with the capacity expansion. You would like to focus on the price at which you're bringing in the assets for. But with this, I'd also want to shift back the focus to earnings because we've seen a multi-quarter low, unitary EBITDA performance at rupees 700 per rupees per ton, which is quite unusual for Shree Cements. So when is that the company is now looking to normalcy to a number of around 1,000 rupee per ton plus? When are we expecting that number? It's going to be a second half of the financial year.
Uh, See, this quarter we expect something better, but after the festive season is over by 15th November, so many Chhat Pujas and even after Diwali, the festive season continues for 10-15 more days. So by 10th or 15th November, we expect markets to restart full consumption. So when consumption is a little higher, prices will also increase. At present, our cost has increased substantially, though volume increase compared to last year, same quarter, is quite good. Prices are also better. But you see, the coal cost has more than doubled for the same kilocalorie heat. So if the coal cost has doubled, we have not been able to pass the corresponding amount of price rise in the market. So it may take 1 or 2 quarters. Almost the time is over. Anytime we expect some price increase.
Okay, so when you say you're expecting a price increase, what is the quantum that you're looking at, and which are the regions you're looking at?
Here, the problem is that we are not in a monopoly situation where we can decide the price. So it is the market, full market. So we expect that price should increase by 15 rupees a bag or so. By when it will increase, whether it will be in go or two go, we just don't know. Because as the demand increases, as the government expenditure increases, then only the price will increase.
All right. So coming back to the question that I had, to the unitary EBITDA performance, what is the number that we can now expect for Q3, and do you expect any further improvement in Q4?
Q4 will be definitely better than Q3. And in Q3, I expect 900 to 1000 rupees, depending on the market price. This quarter, it is 700 rupees. So, little increase in margins is expected. It is around the corner.
Also, Mr. Bhangaru, could you talk about your volume performance? 18% hike, higher YOY basis, but is still higher as compared to the industry estimate standards of a single digit growth. What can be expected going forward?
Going forward, also, we expect little better growth. Now, focus on marketing. Our sales will be definitely better. We want to first take little more volume, stable, make ourselves stable, and then look at the prices also. The price rise has to come. Otherwise, at these prices, no new units will be able to survive.
Sure, I get your point. And also, if you're talking about the survival, let's talk about the cost pressures in that case, because as you said, that coal prices have been going higher. With that, what kind of cost escalation can be expected for quarter 3? And also, could you put a ballpark figure to the overall cost per ton for quarter 3 and quarter 4, if possible?
Quarter three and quarter four, escalation will not be there. We expect prices of coal to come down internationally. So quarter three, as the coal prices have come down a little from $250 to $200. All numbers are rough estimates, but $50 have come down. So quarter three, the costing will come down. In quarter four, costing, even if the prices are same, the high cost material which is there in stock at the beginning of quarter three will be finished, and quarter four our cost should come down further. So quarter three and quarter four costing should be lower than the present quarter.
Fair enough. I'm just going to go back to the discussion that we were having on the strategy now of the company. Mr. Vangur, on a very aerial view, how would the company now change its strategy because it's got more expertise on board right now? It's going to be more on the cost saving parameter, it's going to be more on the inorganic parameter. Which are the areas where you think you're going to be focusing more?
We will be focusing more on marketing strategy, brand building, and to sell premium products a little more. Our premium product is well established in the market. Now it is time that we establish it and go deeper into the market. So marketing will be our main focus area. Secondly, now the things will be more digitalized. Right now we are not as much digitalized as the technology allows us. So we will take better use and full use of technology in the coming quarters.
And when it comes to the inorganic expansion, because the last time we were having a discussion, I believe you said that the company was scouting for an asset which is more than 10 MTPA and also going to be in the region of central and southern India. Does that change now with the new MD stepping in?
We have just said that we want in a 5-year term about 10 million ton from acquisitions. And right now it is not very clear which area and which company, because this is a very short term opportunity. When it comes, if either you take it or you just miss it. So we will look at it at the appropriate time. Right now, it will not be very proper to give a wrong information.
Fair enough. Also, in the race to the JP Associates asset right now that Adani was apparently buying, would you also be interested with that kind of asset? And if not, with Adani now planning to double up the capacity, overall, from being an industry veteran, what do you think your perspective is? Are we headed for more consolidation on board? You think more small players will now be consumed by bigger companies like yours?
In the last 20 years, we have been talking of consolidation continuously. Few companies are taken over by other companies, bigger companies, but at the same time, new names which were not in the cement again comes up. So overall, the level of consolidation is same what it was 20 years back. So it will remain the same. New people will come, uh, and old people, some of them will be gobbled up. So overall, consolidation will not make a difference. If Mr. Adani wants to double the capacity or somebody else wants to increase the capacity, it is very natural. India is growing at a very fast pace. India will be needing in, say, I will say 9 years' time, 8 years' time, almost double the cement which we are having today. So overall, in 8 to 10 years, the capacity has to be uh, up by doubling. We need a doubled capacity or at least 80% more capacity, and that's also everybody has to increase the capacity.
Fair answer. I would also want to suggest one thing. I mean, if you could just chat about the consolidation bit, like we've been talking about it, right? That there has been. You now said that smaller players are apparently going to be gobbled up by the larger players. With this, do you think the industry overall now has very little ability to go ahead and go for the price hike? Because with the incremental competition that sets into the market, there is also a chance that there'd be a fight for the prize. How do you look at that parameter?
No, not really. Price rise has to come because of the natural forces. How long you can resist the price rise if the cost increases? Now, our result this time was almost first. In a day or two, ACC results and other companies' results will be coming. So I just don't know, but feel that pressure will be there on performance, price, profitability of almost the whole sector. So price can be hold for 1 quarter or 2 quarter, but ultimately the prices has to increase. It is a matter of when, and there is no doubt about the direction.
Okay, let's talk about the pockets of growth then. We've already spoken enough about the price hike. We've already spoken about competition. Let's now focus on the pocket of growth coming in. You talk about the real estate, you talk about the infra, because we've seen a lot of moving parameters to that, right? Rising inflation, higher interest rate, all of that has been slowing down home construction in some parts of the country, of course. And also, we're seeing some amount of slowdown in the highway construction. How do you view both the real estate and the infra segment overall right now?
In fact, when you see that Indian consumption is uh, increasing, but expenditure is not there. Lot of help from the government in the way of subsidy is being given. That releases so much more money into the pockets of those who deserve it. So I feel that much will be more capital formation in the personal side, and white goods is almost everybody is taking it, but real capital formation is house, land. So I am personally very bullish about the middle class uh, getting their own house. So housing will be increasing disproportionately to last 5 years. Similarly, government is having a very bullish view. They want to make India a developed country. So much is being done on the roads and railways, ports and airports. So cement consumption is needed, and it will come v- in a very big way. We are very bullish about it. That's why we want to double the capacity.
All right. So you do see fair amount of demand coming in from the real estate segment more than the infra segment, is what I have gathered. Am I correct?
Yes, I am bullish about both the sector. Which will win? It is a one-two race. Anybody can be one, and any, but both are running at a very high speed.
Mr. Bhangur, which are the pockets, areas, or regions of growth for you where you see the realization percolating down well into the numbers next quarter? Which region are you really bullish about?
Uh, North will be good, where we have a big capacity, and I feel even the Eastern India, where the prices at present are very low, the percentage-wise increase in East India will be much better, because a minimum threshold of price is needed. So these are the two areas. In South, good demand is coming. The rains has been bountiful this year, which was a deterrent for the 1 or 2 months consumption. But throughout the year, the crop will be good. There will be enough income in the rural household, and with good rains, Indian GDP grows up still faster. So I am very bullish about the cement consumption.
One a question again on the earnings, but not the earnings, but in fact your expansion strategy. Do you see inorganic expansions happening in this year? Are we looking at
No,
it?
we are this year we will be by March we will be putting up a unit and starting it in Purulia. So that is a 2 million ton grinding unit in Purulia. And after that, as I was saying, in Andhra and Navalgarh, Rajasthan, big plants and integrated plants are coming. So all will be there in either, but next year. This year only Purulia will be completed.
So no acquisitions per se is going to take place in this year for Shree Cement, right?
This year is almost over. Now, by
I
March,
mean this
and
financial
as
year,
I
we
was
have
saying,
more 2 quarters pending towards this financial year, right?
no, no, but as I was saying, there is a very narrow window. You just can't plan much in advance. When the something comes for sale, we will know it, we will bid for it. Look at it, what how it happens.
All right. A word also of festive greetings to you and the entire Shree Cement company as a whole from us here at Money Control. I was just wishing, I was just hoping that if you could lay out your plans for somewhat 2079 of how next Diwali would be better for Shree Cement and overall industry as compared to this Diwali. What are your plans and any wishes for our viewers out there?
So, our plans will be that year after year, volume growth we are seeing, volume growth will be good, margins will be better, and Sri Cement will, the worst quarter is over, I suppose, and now the margins increase will be definitely better. This was a one-off quarter. That's all I can say about it.
and how the next 12 months would be, how different Shree Cement would look in the next 12 months. If you could just view that out for, lay that out for our viewers.
Ah, that you will know yourself, because my saying the changes are going in or going to be in a different direction or definitive direction. How much we will be able to achieve in 1 year time is not known, but definitely you will find a more robust and more updated Sri Cement at 2079 Samvat. We will like to achieve what in the English calendar 2079 will be achieved by many.
Right, that's quite an brilliant vision out there. I wish you all the luck for that, and thank you so much for taking out the time and speaking to Money Control as always.
Thank you.